Hey guys, I'm going to show you some really powerful tools to be able to find stocks in this environment. So what we're doing here is I'm going to go through a lot of different pieces of our software, and please don't feel overwhelmed. It's going to look like a lot of information being thrown at you, but all this is repetition. All you need to do is just go over this several times, and it will become second nature to you. I promise you that. Guys, I was in your situation before. I have friends that were definitely in your situation. I have a good friend. He lives about 30 minutes south of me. And he was a person who he solely did ETFs with his work, and he traded penny stocks.
Yeah, they're penny stocks. Companies that can't get listed on NASDAQ, they don't have enough capital, their shares trade here.
Penny stocks?
Literally penny stocks, where he would go in and do all of this stuff, trading a half a cent here and 3/4 of a cent here and this and that. And he finally saw the YouTube channel and he was like, this value stuff is interesting. Can you walk me through and show me some different things that you look for? So I started going through the financials, and we just started at the basics. We started talking about just cash flows and revenue growth that's going to withstand and not have a massive spike because of an event like COVID, something like that. So if you feel overwhelmed, don't be. Just stick with me on this one and I will show you. So let me start with a very simple one here. And this is pillar search. So we have what are called our 8 pillars, and these are 8 different metrics that we look at just to screen out certain stocks. And so what we look for is a 5-year PE ratio less than 22.5. Was there revenue growth in the company for the last 5 years? Are they buying their shares back, or are they diluting you as a shareholder? You're looking for cash flow growth over the last 5 years. A 5-year return on invested capital. Is it greater than 9? And this is something that is very, very important to me, and I'm going to show you in our very next tool that I go through. Are they growing their net income over the last 5 years? How is their debt situation? What's their price to free cash flow? Is it succinct with their PE ratio, et cetera? So these are just different things, and you can come in and say, hey, I want to select all of them. I just want to look at stocks that hit every single metric. Or if you don't want to do that, you could say, hey, you know what? I only want the companies that have revenue growth, have net income growth, and I don't care about anything else, and ROIC. Those are the 3 things, and you click search, and it's going to pull up those types of companies for you. Now, and you can see that there's a long list just fitting that little criteria. The next thing, which is a new tool and my favorite, Pillar Screener. And this gives you full customization of what you want to do. Now watch this. So I'm going to click a couple of things that I like and that I want to look for in a company. Maybe necessarily I don't want to look at, say, something that just fits the 8 pillars, but I want to go even more customized. So right now I'm just going to click a market cap. A market cap greater than, let's call it $10 billion. There we go. Greater than 100 billion. Okay? Let's go 10 billion. Next, what do I want? Let's say I want a 5-year PE that, let's say I think that it's the 22.5 is too high. I'm going to put in there 20 over the last 5 years. ROIC. Now, when I go to ROIC, I put a big emphasis on ROIC, and maybe I don't think that 9 is enough, and that's what our 8 pillar goes and looks at. But right now, I want to look at something that has 12.5. So I'm going to go and say, I want a ROIC greater than 12.5% over the last 5 years. Now, what I'm also interested in is getting a dividend. So I would like a dividend that's greater than 2%. So it's just going to filter out those companies. And lastly, I want to go in here and I want to find shares outstanding that over the last 5 years, they are let's say greater than 1%, because I want companies that are buying back their shares. Now, let's search. Let's see what we got here. Okay. I have one company to look for. That's a good thing. This is why I'm showing you this. Let's say, okay, let's get rid of this. Now let's search here. Pulls up many more companies. Qualcomm, Valet. So the thing that got me was the shares outstanding. And this is a great way for you to go and look at. Now I have 3M, Target, GSK, HPQ, T. Rowe Price is a company that we've talked about a lot on this show. eBay, Cardinal Health, Best Buy. All right, so now let's say you want to click on a company. Let's say you want to see Qualcomm. The great thing is, this hits all of the metrics that I obviously put in, but you can come here and say, how does it hit the EM pillars? How does it hit those 8 pillars? And you can see that it fills up 7 of those 8 pillars. The only thing that's missing here is this 5-year price to free cash flow. There might be a reason for that one. I just have to go dig. But this is the great thing about the pillar screener. It is completely customizable to what you want. If you wanted companies over 100 billion, have fun. 50 billion, have fun. If you want companies that are less than $100 million or less than $1 billion, whatever you want. It's fully customizable. And that's something that our users have asked for and we have produced. Next, analyst estimates. Now, you've heard me say on the show many times, I don't fully love everything that analysts do, but it does give me a guideline. And what I really like to do is come in and see what they're looking at for earnings per share growth. For Qualcomm, through 2027, they're actually not seeing any earnings per share growth. We're going to end up in exactly the same spot that we started in September of 2022. Now, on the revenue side, however, we're still not seeing it. It's about $45 billion going to about $47.5 billion. Now, when I put this into my stock analyzer tool, which I'm going to do next, I might use these numbers and say, you know what? They're seeing, 1, maybe 2% revenue growth on the high side over the next 5-6 years. Well, I might say, okay, maybe I'm going to go at the high side 1 to 2%. Maybe I'm going to go 4%. I'm going to use those analyst estimates as kind of a guideline to which direction I'm going to go. Now, speaking of Stock Analyzer, this is the most sought after and used part of our software. And what this tool does is it gives you the opportunity to put in assumptions that you are going to make for the future. So I'm going to use Qualcomm since it's up here, and I'm going to say, I'm going to do a 10-year analysis. So I'm going to put in here different numbers for revenue growth, profit margin, free cash flow margin, PE, price to free cash flow, and a desired annual return. If I invest in this company, what return can I have? Or what margin of safety am I going to put in there so that I can pay an adequate price today to make that return going into the future? And you have a low, middle, and high. And look at this. If you want to hold, say you want to hold Qualcomm for more than 10 years, you can go in here and put a 20-year analysis. If you want to hold 3 years, 3-year analysis. You can also put in 1. You just want to make 1 general assumption and see what happens. 2, high and low, or 3. So there's a lot of customization that you can do on here. So for revenue growth, well, the analysts looked and they said that it was 2% on that high side. I'm going to go in and say it's 4% on that high side because the chip market is not getting smaller. It's getting bigger. Profit margin should increase. Prices are going to increase. Inflation is going to be around for a little while. So I'm going to put 4% revenue growth on there. Is that a little bit high? Maybe. But the good thing is on the low end, I'm going to go 0. And I'm going to say, you know what? Worst case, let's say that those analysts are closer than I am on their estimate. Let's say 0% and see what happens. That's the great thing about Stock Analyzer. It can give you that range so you can really beat up the stock or really cheerlead the stock. Profit margin. Let's go with 19, 22, and we'll go 25. Free cash flow margin, it's much less on this company. So let's go with something like 15, 17, and 19. PE. Now, the PE is where you're saying the PE for the future, not the PE today, the PE for the future of this company. And you know what, for the price to free cash flow, I'm actually going to, you know what, I'll leave it the same because this should balance out over time. Now, for my return, this is where you can put in your margin of safety. You can say, hey, I am going to put in some pretty high assumptions here. And if I put in 4%, which is basically double what the analysts are saying over a 10-year period, well, I better make that juice worth my squeeze. So I'm going to put in a 17.5% return. So it's going to give me a lower price, but I got to get that better return. I'm going to click the Analyze button here. And my price right now, currently the stock price is $123. I'm looking anywhere from 55 to 70 to 75 to 100. I put this on my watch list at 99. Why is it on there at 99? It doesn't really show up here. It's on my watch list at 99 because I'm probably interested in buying it around $70 a share. Whoops. So we're used to writing percentages today. $70 a share. And that kind of falls in this middle range, and which is what I'm most comfortable with, that 2% revenue growth. So these are just the different ways that you can go about this. And if you want to, let's say you think that this company is going to do 10% revenue growth for the next, they're going to wow everybody, 10% revenue growth, and you want a 12% return. Put that in there and look at that high side number. Now you would be all in the money buying this stock. But whatever you put into these categories is what you're going to get out. So make sure you're doing it right. And remember, you might be looking at this and saying, what is this guy putting in these numbers for? Where is he getting this from? Watch other videos. Subscribe to the channel. Watch other videos. All this is repetition. If you do the right process over and over and again in anything, look at Tiger Woods, look at Mike Trout, look at anybody that does something really, really well. They just do the same thing over and over again in the right way. This is all just repetition and practice. Now, I mentioned watch list here. The great thing about watch list, you can come up here and it has all of these different stocks on your watch list. Currently, I have 63 stocks that are on my watch list. Paul has about 110 on his, but I'm a little bit more picky sometimes. So when we look at this, and you'll get a glimpse into some of my watch list stocks, Restoration Hardware. I'm looking at this and saying, I want this thing somewhere around $100 and less than $110. Anything that you see on my watch list is not my buy price. Anything you see on my watch list is my buy price plus about 15 to 20% so I can really sell some puts. AutoZone, Microsoft, Coca-Cola, John Deere, Apple, and the list just goes on and on. But this is the great thing. And the best part is, why are these target prices here? So when these stock prices hit these numbers, so when BlackRock hits $425, I'm going to get a notification right up here. I'm going to get a notification on my app, and I'm going to get an email. I'm going to get all three, so it's going to say, you know what? This hit your number. Go take a deeper look and see if you're really interested in this. But right now, I'm not paying attention to BlackRock around 721. It's not even close to where I want to buy it. Why would I waste any time on that? So this is a little bit about our software. And again, I understand that this can feel overwhelming. Stick with it. Watch more videos. Subscribe to the channel. Join the community. Talk to people that are in the community. Everybody was once in your boat. I was once in your boat. Paul was once in your boat. Everybody had to start somewhere. You are starting at a really great place. Have a great day.
There are three things that you absolutely need in order to be a successful investor: the proper mindset, the proper emotion, and the proper process. Which ones are the most important?